I am quite disturbed, not by this crowd, but by another crowd before I came to this country. When someone was talking about riba, comparing it with the cost, if the amount is greater than the average cost, in other words, it is beyond the normal profits, then it is riba, otherwise it is not. I do not think that riba depends upon cost. Riba depends upon whether you take anything extra from the loan that you extend or not. That's all, even if it is 1 cent. As we know, riba is a very serious sin. It is not something very small. If you do not follow, if you still practice riba, then know that Allah is against you. Allah will wage war against you. Allah and His Prophet will wage war against you. What does it mean? It's very, very serious. Why this particular verse is very important? And it has relationship with riba. The reason is, when Allah says, Allah subhanahu wa ta'ala says that He does not create all these heavens and the earth except in truth, except to establish truth, what it really means is to establish justice. There is no justice without truth. Truth is the root, is the foundation for justice. Can you have a court case where there is no truth or there is no facts that you can make a judgment, a judgment that is just? It's impossible. You can only make a judgment which is just and fair when you have all the evidence, when you have all the truths about it. And therefore, truth is really the root for justice. And Allah does not mention this particular verse only in one place in the Quran. As far as I know, there are 5 other places in the Quran with similar verses. وَمَا خَلَقْنَا السَّمَاوَاتِ وَالْأَرْضَ وَمَا بَيْنَهُمَا إِلَّا بِالْحَقِّ. And it is repeated at least 6 times in the Quran. And only one that I mentioned earlier, that Allah says, I do not create all these things for fun. La'ibin, for fun, no. For something very, very serious. But what is the relationship between these two? The prohibition of riba and the creation of this world with justice. Because riba will definitely bring about injustice. Riba will definitely bring about injustice. So when Allah prohibits riba, it means He has already blocked the path towards injustice. Prohibiting riba means you are blocking the path towards injustice. When you block the path towards injustice, there will be only approaches or ways or channels of achieving justice. That means without riba. Similarly, if you think in terms of all the other prohibitions of Allah subhanahu wa ta'ala, gharar prohibited. Why? Because both of them will definitely invite injustice. So Allah prohibits them so that you that particular path that will lead you towards injustice. In economics, we say justice. What do you mean by justice? In economics, we don't use the word justice as much. What we say, it is in equilibrium. When everything is in equilibrium, that means it is fair. Then there is nothing that will be leading towards injustice. Because Allah has already declared that the whole creation of the universe, of the heavens and the earth and all between them, is meant to establish justice. This is why, to me, if you understand properly why the prohibition of riba has been made upon us, and why Allah insisted or emphasized the seriousness of riba itself, I think we should run away from it. Unfortunately, as I said, there are still people who interpret it differently or wrongly. Secondly, there are many, when they are given the choice of whether the financing is Islamic or the other way around, they look at the price, they look at the cost. They forget that the sin of riba is much greater. This is something that we have to be very, very careful about. That's number one issue that I want to talk about today. I remember I was asked to talk about a certain topic. Then I thought, well, this is keynote address. When it is keynote, you don't have to have a note, neither key. Once somebody is very popular and people want to listen to him all the time, but because he's so popular and busy, you cannot get him in 1 month. You got to wait for 9 months appointment before you can get him. So people waited for 9 months, and he came, and so he asked the question, do you all know what I am going to talk about? And everybody says, no, we do not know. And he said, since you all do not know what I am going to talk about, there is no point in me talking, and he sat down. So people were very frustrated with him, not so much disappointed, but frustrated with his question. So they made an appointment to have him another time. That means 9 months later. He came 9 months later and he asked the same question, but the crowd was quite learned this time. They know what is going to happen. So they decided half of the room will say yes, half of the room will say no. So when he asked the question, do you all know what am I going to talk about today? Then of course half says yes, half says no. Then he said, well, those people who say yes, tell those people who say no. And he sat down. So the third time, they made the appointment and he came. And this time, he asked the same question. Sorry, the second time we asked the same question, and the answer was, yes, we know. Then he said, since you all know, what's the point of me talking? And the third time, he said, half say yes, half say no. So then he said, those people who say yes, tell those people who say no. And he sat down. But I'm not going to sit down. So my second issue is this. In relation to the prohibitions that Allah has made to us, there are things that are prohibited and therefore we are not supposed to consume. Consumption in this case is not just consuming in terms of eating, but consumption in terms of economics, which is more general in nature. When you are not supposed to consume certain things, then you should be avoiding it. What happens in economic analysis? You actually get utility, you actually get satisfaction by consumption. Of course, there is this theory about diminishing marginal utility and all that, you know. In other words, the utility will increase at the beginning and then it settles down and then it will be decreasing. Fine. But what happens is when you consume something that is permitted for you, obviously you get positive results, positive utilities. But when you consume those things that are prohibited, do you get positive utilities? No. You get negative utilities. You definitely get negative utilities. So what it means is that if you avoid those things that are prohibited, then what you are getting is something positive. Avoiding prohibited elements will actually increase your utility. So this is a new dimension of the theory of utility. It is completely different. As an example, if you were to be giving donations to people sincerely, Although the amount of wealth that you have will be decreased, but your satisfaction increases. You may be giving away, decreasing your wealth, but in actual fact, you are increasing your satisfaction. That's normal. And there are people who feel so happy when he can get a chance to give a donation. And similarly, he will be so sad if there is no chance to give the donation. I was giving an advice to some of my colleagues during Ramadan. I said one of the things that is good to be done in Ramadan, especially in the last 10 days, on the last 10 nights, is to give sadaqah. If you just ensure that every night you give at least $1 of donation at the end of the day, I think, after you do it for 10 nights, inshallah, you will be definitely having very, very positive utility. Definitely. So similarly here, I think the theory of utility has to be changed. There is what you call as the positive coefficients as well as a negative coefficients. When you take into consideration the negative coefficient, you are going to increase your utility. You don't decrease it. So avoid what is prohibited. That will increase your satisfaction. That is the meaning. And hence, as a Muslim, I do not think that we have that choice of saying, oh, whether I go for conventional or whether I go for Islamic. There is no more choice. In this country, there is no choice. When there was no Islamic bank, you have choice. In fact, you have no choice too. When there was no Islamic bank, everything is riba-based. You have no choice, no doubt. But when there is already Islamic bank, do you still want to go to the conventional? And face Allah later on to say, well, because the price is higher. Can you say that? No way. I'm just expressing this because of my concern that the person who talked about or defined the riba in the way that I mentioned was a professor of economics, a Muslim. And that's why I'm very, very moved. So let's be very, very clear with our objective. Let's be very, very clear with everything that we do. Let's be very, very sincere to Allah subhanahu wa ta'ala. It's only through your sincerity to me that you will be able to combat all challenges, and inshallah you will succeed. You have seen how Mizan Bank in this country succeeded so far. I have been associated with this country for 10 years actually, as a member of the board of one of the Takaful companies for 10 years. I come every 3 months. So much so that every restaurant I know already. But I have stopped doing that, and I'm concentrating on just giving motivation to people. That's what I have done this morning. I don't want to spend more time. Just that to remind you, when you get the microphone, you must know when to stop talking. If you do not know when to stop talking, people will run away from you. And there was a case of one fellow who never stopped talking after 3 hours, not realizing that people were so bored, and people left. Finally, only one left. With one left, he carried on for another 2 hours. Poor guy was dozing off and wake up, still he was talking. Finally, after he finished it, sir, thank you very much for listening to me until I finished my talk. This guy stood up and said, sir, thank you very much for ending your talk. I'm the next speaker. Thank you very much. Assalamu alaikum wa rahmatullah.
Thank you very much, Dr. Sayyid Usman Al-Habshi. It was a very enlightening and a very entertaining talk at the same time. Thanks a lot. I would now invite Dr. Zishan Ahmed, Associate Professor, Karachi School of Business and Leadership, Most of us already know Dr. Zishan. He's been associated with the field of Islamic finance for the last 15, 16 years, one of the pioneers of this field in this country. Ladies and gentlemen, please put your hands together for Dr. Zishan Ahmed.
Alhamdulillah Rabbil Alameen wa salatu wa salam ala Rasul Kareem. Assalamu alaikum. So I happen to be the next speaker. I'll begin, with on a very positive, optimistic note here. I'd like to offer my congratulations to all those people who've been associated with this discipline, Islamic finance, who've been working hard for decades to bring us to this stage that we are seeing it here now. I want to congratulate the Islamic bankers and other Islamic financial professionals, Islamic fund managers, Islamic, the people who've been teaching, who've been associated with academics in Islamic finance, Islamic economics. They have done their contribution, and above all, the ulama and the Sharia advisors who have worked very hard and to develop solutions for Islamic finance that we are able to implement these days. But this journey has been very challenging and full of many ups and downs. When we look back, it is unimaginable to see where we have come. If you look back 20 years ago, when from the same institute from where we have launched this center and we are holding this conference, when I was graduating 20 years ago, and I was having this conversation with some of the people around me that, I'm a bit concerned. So my major was in finance. I was good in finance. I'm a little bit concerned about, to join halal career. I want to avoid haram careers. I want to find out. And the people at that time, I'm not talking about, half a century ago, it's just a couple of decades ago, the people would say, well, nobody is talking about this these days. This is not even a relevant conversation. This is not even a point that you should be bothered about. Everybody would put me down and would say, well, Zishan, nobody thinks about these things. You have to grab the best job available, which boosts your career, and that's it. Why do you have to be worried about, whether it's halal, haram, ethical, non-ethical? This was 20 years ago. 15 years ago, I was here again at IBA as a faculty member, and I was given the first course to teach, and this course was in finance. So I got a bit concerned, and I said, well, is it, again, the same thing came back. Is it okay? Is it halal? Is it haram? What should I do? So I made istikhara. And the next day I was sitting in, then in Mizan. It was not a commercial bank as yet. It was just an investment bank at that point in time. And I met our scholar, our beloved brother, Dr. Imran Usmani. And we came up with this is the proposition, of course, to be offered at IBA first time ever, back in 1999-2000. When we were offering that course, this is just 15 years ago, there was no support from IBA. In fact, that was offered as my personal, something that I'm personally interested in. So I had to make the arrangements. I had to tell the PN to keep the lights open, to open the door. There were no credits for that course. There was no institutional support for that course. It was just a personal initiative, but that course was a landmark course in terms of the people who've been serving this industry, like the director of this center itself, Ahmed Ali Siddiqui, the person who's leading the product initiative, the Sharia compliance at Bank Islami, Faisal Sheikh, the person who's rose to the level of global product developer in Standard Chartered, Khurram Hilal, Imran sitting here who's mastering us. They were all, and myself, were all the product of this course. So even though that course did not enjoy the institutional support, it was still landmark in its achievement. And while the course was going on, the Supreme Court judgment came, the historic Supreme Court judgment prohibiting riba came. This was 15 years ago, without any institutional support. 13 years ago, I was in the US and discussing my probable topic for my dissertation with my dissertation supervisor, Theodore Kors. And Theodore Kors is a very well-published author, a very established academic. He had been receiving awards from top journals in finance, and he was giving me advice about the topic. And again, my passion comes back, and I say, can we do it in Islamic finance? And Theodore Kors responds by saying, well, Zishan, okay, we can do it if all the banks in your country are Islamic. Now, remember, this is 2002, 2003. And I said, Dr. Kors, there's hardly any banks which is Islamic in Pakistan as yet. At that time, only Mizan had, I think, received the license, and their operations were not on by then. So then Theodore Kors responded by saying, Zishan, well, let the Muslims adopt that first. Let the Muslim come on Islamic banking first, then we Americans will start research on that. So that was a very logical answer, so I had to do my dissertation in something else. 9 years ago, this is another one of the prestigious elitist university in Pakistan, Lahore University of Management Sciences, and I am a faculty member there, and I'm trying to launch the Islamic finance course for the first time there. There's no course such as Islamic finance as yet at LUMS. This is 2007. The people who are of religious bent, they tells me that, the major narrative of LUMS is basically liberal, secular, so you'll find it hard to launch a course like that here. This is not going to go. Unless you establish, you spend like 1 year at LUMS, you establish your reputation, and then Dr. Zishan is known as a LUMS faculty member, then you launch it. Don't launch it just by, when you reach LUMS right in the beginning. Wait for till you earn that clout, till you have that time. Okay, so I wait for 1 year and I launch that course. That course is launched, students enroll in that course, but again, there is no institutional support in terms that, one of my senior colleagues tells me that this is not going to show up in your total load. So we have, our workload in terms of the teaching hours we teach in the entire year. For several years, I was teaching at LUMS, Islamic Finance, and they would, somebody, if you would sympathize with me, oh, Zishan's load exceeds normal teaching load. Other professors are teaching this much, he's teaching that much. Some of those people would say, well, this is self-inflicted. He wants to pursue his passion, Islamic finance, and that's why he's teaching those additional courses in undergrad and MBA level. This is just 9 years ago. But the same places where we had no institutional support for offering Islamic finance courses just 7 years ago, just 13 years ago, now we have full-fledged centers. And the first degree program is coming up in a quarter's time. We are hosting conferences like this. This is a major leap. This is a major stride by any means. This is a very short time period that has expired since then, since I'm talking about. Just 5 to 6 years ago, again, if you look at what happened in Pakistan, the fatwa declaring all kind of Islamic finance, all kind of Islamic banking as haram, shook. Was a major earthquake in this industry and pulled the rug under the rug of credibility and authenticity from under this industry. 5, 6 years later, we are still surviving, we are flourishing. So given all of this, this is a great moment of celebration. This has been, if you look at on the academic side, on the side of philosophical and scholarly ideas, this has been a major achievement as well. If you look at the modernist narrative, where only, I'm talking about the modernist narrative, I'm talking about enlightened humanism. The only entities who can claim what is right, what is wrong, is reason or science. There's no place of religion in that narrative. Religion does not hold a position. Religion is pure demagogy. It is biases. It is false belief. It's just like witchcraft. Religion has no scientific, no rational basis. In that narrative, if you can create an industry like that, and if you can force places like Stanford, Cambridge, Harvard to offer courses in Islamic finance, and their authors to engage in conversations in Islamic finance, that's a big achievement. Again, because many a times in Islamic finance, the reasons that we come up with is not based on logic. The justifications that we come up with is not based on reason. It's based on nas of Quran, nas of hadith, which is totally understandable to somebody who does not believe in those things. Right? So for example, an accountant would say, well, I don't see the economic, the substance here. It's just a difference of form. Well, then you have to learn from these people. There's something they call substance, which is when something has been declared, which no matter how similar it looks to you, to the Prophet, to the Shari, to the person who announced this Sharia, who came up with Sharia, for all those believers who follow him, There's a substance. There is a difference of illat. There's a difference of hukum. No matter how economists view it a similar fashion, they say that this is exactly the same. But for the person who brought it in Sharia, for example, the example of Islam declares forward sale prohibited. But at the same time, Islam declares salam as perfectly permissible. Salam is a combination of, for those people who know financial engineering, who know salam, they know that salam is a combination of forward transaction plus a loan. And the parties build considerations. They build time value of money as well, and they build, when they're doing salam, they also look at the future market. They would do that, right? Yet, salam is established with a different is different. The epistemology of Islam is different. How do we know it's halal? Because there are sahih ahadith, not one, many of them, so that the scholars have to accept it. Right? So this is a different kind of substance that we are looking at. So this is something that, again, we look into. So this is something that new entrants, people who are taking initiative in Islamic finance and learning for the first time, need to be cognizant of. One last thing that I'll finish my note on. We can celebrate all our successes so far, but moving forward, there are two big challenges that are lurking deep, dark inside the future of Islamic finance. And those challenges are, again, from our common enemy, extremism. Extremism, just as we view it as the biggest threat to the social fabric, to the society itself, we see extremism as a big threat to Islamic finance. What kind of extremism am I talking about? Here there are two types of extremism that I am focusing on. And let me put it in the words of Imam Sufyan al-Thawri rahimahullah. Imam Sufyan al-Thawri, the great scholar, he used to say that the job of a scholar, of an alim, and noted down the words, the crisp words he's using, is to earn credible, quote unquote, credible, quote unquote, concessions for the ummah, for the people. Concessions, but credible ones. And second statement says that as far as declaring everything haram is concerned, everything prohibited is concerned, any ignorant person can do that. Any jahil can do that. So he's talking about two extremes. One is without credibility, you're giving concessions. Kullu halal. That's one extreme. Excessive permissibility. To the point that you are even choking, violating the very fundamental tenets. That's one extreme. The other extreme is kullu haram. That is highlighted in the second part of the statement. No. Everything, that has word finance in it, has word bank in it, cannot be Islamic. It has to be haram. No deeper research. The research is limited to having the word finance or bank. That's enough to declare it haram. Kullu haram. So from these two extremes, nothing can survive. So these two extremes, again, are threats for Islamic finance in future as well. I'm becoming less concerned about the extreme that says kullu haram, because they are not going to survive. Such people, because their impact is basically proving to the society that Islam is a religion that belonged to 1400 years ago. It has no relevance for the modern times. You cannot present the solutions for the modern time. But my concerns are becoming a bit more grave over the kullu halal side. The problem with kullu halal side is that not only you make this non-maqbool in the greatest schemes of things, but you also, chances are that if you cannot, even if you are making all the efforts to make the distinction, and the products are right and legitimate and credible and authentic, even then, if in the perception of society you haven't been able to communicate that, again, this is a big threat. Because the people, they say there's no difference. They can't see the difference. So here our job, I'll take my responsibility before anyone else as an academic, as somebody who's been associated with Islamic finance for so long, and the Islamic bankers and the Sharia scholars, every one of us, we need to fight these two extremes and come up with a solution which is the best of these extremes. We stay in the middle and we come with the solutions which are, again, in the words of Imam Sufyan al-Thawri, which are which are implementable, which are practical on one hand, but on the other hand, they are credible, they have all the authenticity and the support from ulama. Jazakallah khair.
Thank you very much, Dr. Zishan. I would now request the volunteers to please be ready with the mementos. I would request Dr. Ishrat to please, is Dr. Ishrat here? I would request Dr. Ishrat to please come over stage to hand over the mementos. Mr. Zafar Hijazi, I would request to please collect the memento from Dr. Ishrat. Please put your hands together for Mr. Hijazi. Professor Datuk Sayyid Usman Al-Habshi. Dr. Zishan Ahmed. Thank you very much. I would like to thank all the sharing such valuable thoughts with the audience. Straight away, we would now be moving forward. Straight away, we would be moving forward to the next session, that is about infrastructure development for stimulating growth. I would request Dr. Zishan to please be on stage because he is also a participant of this session as well. Mr. Ajlal Alvi, Chief Executive Officer, International Institute of Financial Markets. I would request Mr. Ajlal to please come on stage. Mr. Ashar Nazim, Partner, Global Islamic Banking Center, Ernst & Young. Mr. Hassan Bilgrami, President and CEO, Bank Islami. Mr. Mohammad Shoaib, CEO, Al Mizan Investment Management Limited. Dr. Zishan, I would request you to please come on stage. The key topics on which the participants will be discussing are standardization and harmonization, taxation, transparency, and accounting disclosures, incentives for Islamic capital market development, and finally, the buzzword CPAC. Is CPAC making any paradigm shift? Finally, I would request the session chair, Mr. Noor Abid, to please come on stage. Mr. Noor Abid is an AOFI BOT member. He's the member of Board of Directors, Kuwait Finance House Group. He's a member of Board of Directors of a number of Islamic financial institutions worldwide. Mr. Noor Abid. So, we would be inviting over the participants to come on stage for delivering their talk, or we can sit here. You can. So I would request Mr. Noor Abid to please moderate the discussion, and we can start over as you wish.
Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. Nahmaduhu wa nusalli ala Rasulihil Kareem. Dignitaries, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. It's my privilege to have been asked to facilitate this session. The topics that Zishan, Imran mentioned are very interesting. And you have cream de la cream of the industry sitting with me on my left and on my right. The way this session would work is that I would ask each of the panelists to speak on one of the specific topics. But we would allocate time at the end for you to ask questions. I'm sure you have lots of questions to ask from these industry experts who are sitting with me. So please have those questions ready, and will give you the opportunities. I just want to set the tone for the industry. The entire Islamic financial assets globally, at least in the major core markets, are estimated to be around 3 trillion. Now that appears to be really very large number. But if you compare it with the what UN launched, Principles of Responsible Investing, that in the last few years has grown to 45 trillion. And if you compare it with the global traditional Islamic finance, their assets are in excess of 300 trillion. So what does that mean? 300 trillion versus 3 trillion. We are 1%. And we've been at it for a very long time. So to me, the opportunity for Islamic finance to expand globally, particularly in its core market, it really, if you look into the data, you can go to either Ernst & Young, Thomson Reuters, even IIFM websites, and you will see the data. And the percentage of Islamic banking in all of the core Islamic countries, I hate using this word, but really is pathetic. It's very, very small. So there is an opportunity, and you must have heard yesterday the ambition of the Pakistan government to take the Islamic banking in Pakistan beyond 20%. That can happen and should happen, but all of us need to play our role in it. What also disturbs me quite often is that year by year, I see the Islamic assets, particularly of the Middle Eastern banks, not Pakistani banks, but the Middle East banks, in excess of 500 billion every year flow into London, Frankfurt, Paris financial markets. They are given to traditional banking. And that's really not what Islamic banking should be about. So that's another opportunity, and I would urge my panelists to really speak about that too. At the end of 2015, the combined profits of the Islamic banks, Islamic finance in core markets were in excess of $13 billion. These are estimated to grow by 2021 to 38 billion. So again, a huge opportunity, massive opportunity. And I'm sure there are lots of people sitting here who would want to make a big difference. Very briefly, Uniformity and Consistency of Accounting and Auditing Standards, IOFI, which I represent, I sit on the board, has done a great job, but needs to do a lot more. That I would like to share with you that IOFI Secretary General and a couple of members of the board went and had a meeting with IASB in London. We met the IASB chairman and Simon Upton. Simon Upton heads the group IASB has formed to look at the Islamic accounting standards issued by IOFI, compare them with IFRS's, and identify what are the gaps. IOFI has been set up not to reinvent the wheel. IFRS has done comprehensive job. IASB has done a comprehensive job of issuing IFRS's in as many fields as they have. The role of IOFI and role of IIFM and the role of IFSB in Malaysia and all the Islamic infrastructure organizations has been to fill the gap. Islamic finance is different. You heard the good professor explain to you what really riba is and what Islamic finance is all about. So it's different. Therefore, it needs standards for specific interpretation and specific requirements of Sharia. So for that reason, consistency, uniformity of Islamic standards across the Islamic banking, Islamic finance is really critical. So IOFI is trying to build bridges and have linked up with IASs. It's a pity that Zafar Sahib have gone. I was going to ask him, request him, that now that he's achieved 2% reduction for Islamic companies, he should really look at Islamic investment companies and Islamic banks too, because they suffer from the same disadvantage that rest of the industry does. I would now invite my panelists, starting with Hassan Saab with you, to talk about development of Islamic banks in Pakistan.
Shukriya Noor Abid Sahab. Assalamu alaikum, ladies and gentlemen. I was hoping that I would be the last, but as it turned out, I'm the first. So briefly, I have organized my presentation under three heads that when we talk about development of Islamic finance and Islamic banking in Pakistan, where are the areas we should be focusing on. The first area, and I think the first challenge, was the acceptance level, and I'll elaborate on it. Then the next level was the strategy level, on which the things changed over the years, and the third thing, and the third area which I would like to concentrate are the factors which we should be considering if we want to really develop Islamic banking and finance. So now coming back to the macro level, I think the first breakthrough was achieved when there was realization within the regulators that Islamic finance is not something to be resisted. Actually, it has to be accepted to achieve the financial inclusion goal. And this realization came during the period of, after the judgment of Supreme Court, when President Musharraf was in power, and Dr. Ishrat and the Ministry of Finance, especially the State Bank of Pakistan, worked very hard to come up and develop a set of regulatory framework which would lay the foundation of Islamic banking in Pakistan. So, I mean, the approach changed diagonally, because just before this judgment, the approach of government of Pakistan was that they were resisting Islamic banking in all shapes and form, and so much so that government of Pakistan had actually gone to the Supreme Court to say that the Islamic banking, there is no such thing in Islamic banking, and the PLS system is actually in line with Islamic finance. So, I mean, the dichotomy that we see here is this, that there was a government which was perceived to be secular, was more receptive to Islamic finance than a government which was viewed to be on the right side. Then, after the regulatory framework was done and it was put in place, the second level of acceptance had to be achieved within the circles of ulama. Because on and off, we would hear that that Islamic, the type of banking that Islamic banks do is not strictly in conformity with the principles of Islam. But in 2008, a massive fatwa came, and I say massive because practically everybody who was somebody had signed that fatwa. And I remember when I woke up and I read about the fatwa in the jung, I was really worried, and I prepared myself mentally for a run on the bank and what we can do, and what are the type of finances that we are going to call back to pay the depositors, because we were just 2 years old and we had about 36 branches. So by the end of the day, we had lost only 1.5 million rupees out of 9.8 billion rupees. So, I mean, then I realized that, I mean, people do listen to ulama to a level, but then when it comes to issues such as finances, they apply their mind also, and they also do their own thinking. It also collaborates, because when we actually opened the bank, one of the first things we used to do was, when we open a branch, we would have an open house, people would come and we'll serve them tea, etc. And we were prepared along with our Sharia advisor to answer questions about Islamic finance. And I noticed that gradually people stopped coming because nobody had any question, and when they came to the branch, they precisely know more, I mean, so much about Islamic finance that at least it was suffice to open an account. And on and off they would have questions, but it diminished, and I think in the last 4 or 5 years, at least I have not entered into any debate with anyone in Pakistan that is it Islamic or not Islamic. Then another correction in our approach was that, or what was the learning process, that we thought that the demand for Islamic finance would be most in the rural areas, especially in the frontier province. Conversely, we found out that the demand for Islamic finance was the greatest in Karachi, and that too in areas where the literacy rate was very high. And in northern Pakistan, people were actually reluctant to part with money, and they were not so, I mean, they won't mind not getting any return on their deposit, but they just didn't want to part with the money. And then the per ticket size in Karachi was so huge that it would actually justify opening a branch after a kilometer, as against opening to I mean, going into deep rural areas, we will not have people, trained people, systems issues, etc., etc. So, and the correction that we had to do in our strategy was that we will just focus on educated Pakistanis who have a religious bent of mind. And that changed the game altogether, as against concentrating on people who are very religious or who have a religious outlook, but they are confused. So an average customer, at least for Bank Islami today, is somebody who would dress up like you and me. He's religiously inclined and he wants a service which is at par with any bank in the country, and it is Sharia compliant. So these were the three challenges that we had to go through in the initial phase. Then came the strategy part, and as in the last 10 years that when I look back, the strategy also swung from one extreme to the other. The first was that all of us thought that there is a huge demand and it has to be creamed up, and people are not really particular about the deposit, the rates that we offer, which was correct and which is correct. And this is also correct that when Islamic banks came, the demand was so much that people would actually make an effort to go and open an account with an Islamic bank. I remember my family members who used to live in North Nasabad would bank with Mizan Bank in FTC. So they will travel about 20-23 kilometers to open an account, and that's it. And on the side note, Mr. Irfan Siddiqui is not here, but I used to tell him that the activities of my retired father, one of the activities of my retired father is banking with Mizan Bank and getting a completion certificate from DHA. So they would, both of these would consume the entire day, and he quite enjoyed it also. So, but those things have changed. So if you go to any Islamic bank in today, you will get probably a better service. And Islamic banks also, I mean, those customers who are not indifferent about service and rates are long gone. So you don't find any of those good customers. Then the second level was the product range. None of us, when we started, had enough product. So, I mean, one had to make an effort to get a product of your choice. But if you look today, all the Islamic banks, I mean, I'm talking about the full-fledged Islamic banks, have actually a product range which is better than their conventional counterparts. Like there was a news item the other day in the newspaper that Islamic banks dominate mortgage financing, which is correct. In fact, we check every quarter, and the three Islamic banks who are active in this business control almost 90% of the mortgage market of the country. And they are number 1, 2, 3 also. So likewise in consumer, we have a huge market share. And even in the recession time, the auto ijara market was driven by the Islamic banks, but even on the trade finance, I mean, you name anything and the Islamic banks have got the product. So on product range, they are absolutely at par with the conventional banks, and the strategy is no more to, I mean, to use the faith or the desire of the customer to bank with an Islamic bank as a tool to get business. Actually, it is the service and the product range. Likewise, two areas that I would like to briefly touch upon are the service and the technology. On the technology, the 4 Islamic banks that are operational now, 3 have got, even mobile apps now that are operational, and it can be compared that of the 32 Islamic banks, only 13 have got mobile apps. And if you compare the rankings of these mobile apps, the number 1 and number 2 are also Islamic banks. So, I mean, we launched a mobile app about 2 weeks back, and the rating is 4.95 out of 5. And in terms of maximum downloads, I think Mizan is the leader. So that would also tell you that Islamic banking is progressing in Pakistan, not because of the faith only, it is the quality of the service and the product range also. Now, let me conclude my presentation by just touching upon briefly on the challenges that Islamic banks have also. We have all heard that the desire of the government is to promote Islamic banking, and we would like to achieve a certain benchmark or a market share by end of 2020 and 2020. But the fact remains that there are huge challenges in that. And I mean, we do recognize that there is a tremendous amount of goodwill within the government, but it has not translated into any concrete steps. And if I'm permitted to say, it's more of a lip service than any action. you look at the steps that Islamic banks have taken themselves, that out of 4, 3 have got tier 2 capital. Like Mizan has recently launched this tier 2 capital, Al Barka did about 2 years back. Then out of the 4 banks, 2 are listed, and if you look at their valuations, the price to book is actually better than the price to book of conventional banks. Despite of that, Islamic banks have not attracted capital as much as they should be. And the reason is this, that we do not have any instruments whereby we can deploy our excessive liquidity, and as a result, except for Mizan Bank, and even Mizan Bank has suffered because our return on equity is not at par with the conventional banks. And if your return ROE is not at par with conventional banks, you are in the long run going to struggle to get the capital, which is going to hamper you in areas such as getting good talent, investing in technology, expansion of network, etc., etc. So as a result, an industry which has huge potential to attract capital, not only from locally, from abroad, is just suffering because the government has not been able to take any action. Nur Abid Saab talked about CPAC, which is all about infrastructure. So on one hand, we have a potential of $46 billion, and on the other hand, we do not have any sukuk which can finance the CPAC. So I mean, what a dichotomy, and what a contradiction. Similarly, if you look at the deposits of Islamic banks and the sukuks that governments have issued, when this government came into power, 30%, the sukuks issued were 30% of the deposits. Today they are less than 14%. So ROE of all the banks have suffered, and government is, I regret to say, the government has even realized about it. And this is not even confined to Islamic banks also. Islamic windows have also suffered because of that. So I mean, this is a huge challenge, and earning a legitimate profit should be the motive of every business, because if a business is not earning profit, its viability in the long term is questionable. In fact, it's a regulatory risk. So this I wanted to touch upon. The last thing is within this is that I mean, all said and done, the good things about two other good things about Islamic banks is this, that last year an Islamic bank was chosen by a state bank, and I repeat the word chosen by a state bank, to bail out a failed bank in Pakistan, which was of the roughly of the same size. So that also speaks the confidence of the regulator that they have I mean gone are the days when National Bank was the bin of everything. So this time they chose a private sector bank, which was an Islamic bank, to bail out a failed bank. And the result is this, that even for the commercial mergers which have taken for commercial reasons, they have not been able to report profit. We have reported profit, except for one quarter, consistently we have started reporting profits. That speaks of the strength of Islamic banking industry. But that strength can only be sustained if the banks have something on which they can earn return, so that they can justify their existence. Thank you very much.
Thank you very much, Hassan Saab, for a very informative presentation. I would say, however, that you're very lucky. Nobody asked you about Islamic banking anymore. I was flying last night from Kuwait, and the gentleman sitting next to me, who was coming to Karachi to spend Eid with his family, asked me, what are you going to Karachi for? So I said to attend an Islamic finance forum. And his comment was, I don't see the difference. What's the difference between Islamic banks and the other banks? So we had a long discussion, but I got nowhere. At the end, I asked him, where is your bank account? He said, KFH. That's an Islamic bank. So I said, that's my case. Thank you, Hassan Saab. I would now invite Shoaib Saab to please speak about incentives for capital markets.
Assalamu alaikum, ladies and gentlemen. I'm going to talk a little bit about the capital markets, especially in the context of asset management. I'm going to talk more specifically about the journey of the asset management industry in Pakistan, and certainly a little touch upon the incentives as well. The journey of Islamic capital markets in Pakistan is not as long as the journey of the Islamic banks. And if you look at it in 2002, 2003, there were hardly any Islamic asset management company in the country. From that point in time, with a 0% market share, alhamdulillah, the market share, as the chairman SCCP also endorsed, the market share of the Islamic asset management industry has grown to 30%. And I'm very confident that in the next 5 to 10 years, by 2025, it will be more than 50%, inshallah. Some of the challenges that have come across during this period is that there was a lot of skepticism when the first Islamic fund was launched in Pakistan. There was a lot of concern whether they will have the ability to diversify because the Pakistani capital market is very limited. And but alhamdulillah, it has been a long journey, a fruitful journey, and over the years the growth has been tremendous. With just one asset management company, which was Mizan, which launched Islamic Fund in 2003. Today, alhamdulillah, all the 20 asset management companies in Pakistan, all of them are focusing on Sharia compliant funds. And I was looking at the launch of new funds in 2015-16. Out of the total number of funds launched, 90% of the funds launched were Islamic funds. Only 10% were conventional. This has been possible because of the inherent strength of the screening mechanism, inherent strength of the selection criteria which are used for selection of investments. And what we have seen is that alhamdulillah, in the last 5 years, the CAGR return of Islamic funds collectively as an industry has been about 30% per annum, which is unheard of, not only in the conventional market in Pakistan, but even across the world. It's totally unheard of 30% return CAGR for the last 5 years. That basically means that an investor who invested 100 rupees has been able to reach a target of 450 to 500 rupees in the last 5 years. Now, what have been the challenges? Obviously, one of the challenges, as Hassan also mentioned about it, and that has been discussed yesterday, is the availability of the investable assets. And that has been the biggest challenge which has been hindering the growth of the Islamic asset management industry. If we were able to get more assets on the fixed income and the money market side, then the growth would have been even higher compared to what has been. As far as the matter of incentive is concerned, as we had the privilege to hear the story given by Dr. Zishan, that there was no support available. It has been the same case as far as the Islamic asset management industry in Pakistan has been concerned. There have been no fiscal incentives. It is only because of the performance of the fund, it is because of the investment process, it is because of the use of technology that what we have seen is there has been a transformation from the conventional side to the Islamic side. MashaAllah, recently there have been some initiatives to provide incentives to, as Noor Abbas have also mentioned, 2% tax incentive is being given to the listed manufacturing companies if they are Sharia compliant. Similarly, there have been a lot of challenges on the sukuk side, on the taxation side, and the Honorable Finance Minister also mentioned that recently there has been an ordinance which has allowed actually provided a level playing field to the issuance of sukuk. So hopefully we are optimistic that we will see more issuance of sukuks. But one important thing which I would like to highlight here and invite the attention of the audience is that what we have seen is that if we came up with the 100% conventional banking. It was huge. And today the bank size of the banking industry 10 trillion. The Islamic banks have a 13% share today. At the same time, the capital markets in the country have been very, very small. The mutual fund industry has been very small. So when the Islamic funds industry was launched, it gave it an opportunity to grow very fast. And as I just mentioned, 30% market share now. Now at this point in time, the Pakistan Stock Exchange shares have been being divested. The SCCP and the government, and especially finance minister, is taking keen interest in that. And we are targeting to offload 60% shares of the Pakistan Stock Exchange to institutional and private investors, both domestic and institutional. Our capital markets right now comprises of only the cash-only market. We don't have any futures, we don't have any derivative products, we don't have any options. And I believe there's a roadmap actually to launch all those new products. My humble request would be to this August forum that when we are coming up with the new products, it is an ideal opportunity for us to come up with the Sharia compliant structures the products which are compliant with the Sharia. At the moment, the financing mechanism at the stock exchange is all conventional. There has been a lot of work done by the product development committee and the Sharia scholars in that area also. We have reached a point where we can implement a mechanism and introduce the Sharia compliant financing products at the stock exchange. But at the same time, it is very, very important that all the new products that we are looking at for launch to expand the market and to expand the horizon of the capital markets in the country. It is very important that at this point in time when these new products are being developed, a special attention is paid to the Sharia compliant of the structure. They are, and we don't have to do, it's not a rocket science. These structures have been identified, developed, tested, and implemented in other capital markets, in the financial markets, and it is the right time to focus on that. And on this note, I would conclude my presentation. Thank you.
Thank you very much, Shuaib Saab. I would now invite Ijlal Alvi to talk about standardization and harmonization of Islamic finance and contribution made by IIFM in that particular space. Please, go ahead.
Bismillahirrahmanirrahim. Distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. It's indeed a pleasure to be here today, and I'm honored to be invited by IBA CIF to talk about the standardization, the subject which is very close to my heart. I started working as a standard setter some 12 years back, and it's just looked yesterday that I started. And we do have sort of challenges in terms of developing, bringing unification and standardization. As mentioned by the governor yesterday, the standardization is the key, and my message today would be how to go about working together and how to cooperate and how to basically build the industry when we have challenges, as Sheikh Taqi rightly mentioned, and how to sort of implement. I think the major challenge comes when you are sort of developing the standard implementation. Right, like we mentioned by Mr. Nurawit about AOFI accounting standards being developed, but they are sometimes being used, especially the Sharia standards, for reference. Sometimes accounting standards are for reference. They are not really being made regulatory sort of requirements. And I think that's one of the key sort of aspect is the regulator's role as well as the industry role. We have in the Islamic industry sort of three main standard setting organizations. One is AOFI, which is very well known here, I'm sure, and their Sharia standards are applied across the globe, and we are really grateful to Sheikh Taqi and all the scholars who have been working in this regard. Then there is, of course, AOFI accounting and auditing standards, which are being sort of, I understand, since I'm also based in Bahrain, been reviewed and revised and been reworked by the conventional, because we have to work together. There are sort of level of integration which we have to achieve. So although we have our own sort of distinguished nature of the industry, so we cannot really treat the similar things in the same manner. And I will mention about few of the products which, the reason for my standing today is that I can talk longer. So, which I don't think so is the case, which will be allowed, but that's why I'm standing today, and there are a lot more than one people who are listening to me. And also, when you look at the standardization, you look at the neutrality, you look at the middle ground, which Dr. Zishan rightly mentioned. And these are the things which you have to really look into it. We also have in Malaysia, of course, the IFSB, which looks at the regulatory aspects. And then in the last 6-7 years, IFM, we started looking at developing documentation and product standards. And these standards are combining the efforts of AOFI and IFSB. And we made it very clear now in the recent years that we don't duplicate our efforts. And we are controlled by central banks sometimes as our founding members. We have a number of sort of central banks who are founders, including IDB. So these things are being looked at. And I'm quite happy to see that we are trying to work together and try to work in our own areas to develop the industry. One of the aspects when you are looking at standardization of documentation and products that we have to look at all the angle. AOFI may have a standard, Sharia standard, let's say on wakala, how the working of restricted wakala will work, how the unrestricted wakala will work, may have accounting treatment for that, but how to apply that in a marketplace, how the banks can use it or the industry can use it, that's the biggest challenge when we develop a standard. So it has to be practical enough, it has to be widely acceptable by the Sharia, so we have to see that these aspects are covered when we are developing. And also we have to see the legal aspects, because the commercial law side is very important to look at it when you're doing any standard to develop, especially the documentation standard. Thirdly, you have to look at the standard. At the national level, you may have your own, I'm sure. As Mr. Hassan rightly mentioned, you have retail products. We have not done on the retail product yet, but on the corporate side and trade finance and capital market, we have been working on. And these are sort of, you look at the legal requirements, and you look at the regulatory requirements, which are very important when you are sort of developing, how that legal basis these standards will work. And the input of the industry is extremely critical. That's why I always say that, when you're doing standards, you may have your national level, but then you have to look at cross-border, how internationally things are done. You may have certain good things being practiced here, I'm sure in Pakistan I have seen, but how to take those abroad also is very important. And how to see these standards can be applied here also, can be used. I think this is one of the key messages I would like to pass on, that we need to sort of work together, because these standard setting organization is created as a development institutions. We don't have any other role other than develop the industry. We are created as a non-profit. So the challenge is to work really in those sort of areas. Now I will like to cover some of the technical aspects. Unfortunately, I don't have a lot of time. The three areas which I would like to sort of briefly touch upon is, one is the sukuk. It's a big challenge. There is a sukuk report on our website, and I left a few copies which we publish. That's the only thing which we do on the research side. We do all the documentation as a standards. And if you sort of look at that report, there are 3-4 sort of things which I would like to highlight. One is that sukuk market internationally, if you look at it, at the financial crisis time, it came down like any other sort of bond market and not. Although there are major differences, we should not call it a bond. There's always an underlying assets requirement which are there. And I understand that's the challenge sometimes to find the right assets. And that's why, if you see, we have mostly on the domestic level, we have seen for interbank market, the muraba use. I think that's some of the challenge, sukuk based on muraba. And most of the countries, muraba sukuks are not tradable, widely Sharia wise. They can be traded at par. So there is no sort of trading on discount or premium in case of muraba. And I think we have over sort of reliance in certain areas. If you look at globally, especially for the interbank market, I think is a challenge, and the use of muraba structure. We have also seen recently in the international market, when I call international sukuks, these are mostly dollar sukuks. There are currencies like Malaysian ringgit, for example, or Sing dollar, or euros, which are more sort of readily tradable. You'll see use now shifting if you compare it at the financial crisis time. Of course, the market came down, and then there were some sort of issues with the restructuring and default, and Dr. Salman, I think, from IRTI today will talk about those, that what happened and how the confidence came back when they were able to restructure the sukuk. The market picked up, and we have seen 2012 onwards around $100+ billion is sukuk been issued internationally, both domestic and international. And last year, because of the change in the short-term market in Bank Negara, Malaysia, there was a drop, but that was the short-term market. your longer term market is still, I think, is fairly reasonably okay. It's not really, I mean, that big. It's around 25, 30 billion dollars per year of sukuk issuances. But one change which we have noticed, and you'll see in our website, I encourage you to go and check, is the shift. Ijara still is there. I think role is around 20% Ijara structures internationally, but we have shifted towards the Wakala structure. Well, Wakala gives you flexibility. Of course, underlying assets are there. But one challenge I see is there, that use of Murabaha under Wakala. I think that we have to be mindful. That level of Murabaha, maybe some time it necessitates that you have certain level of Murabaha to bring the industry. We fully understand that we have challenges and we have to move on and overcome these challenges. So these are the two sort of areas which in the sukuk market we have seen structure-wise that these are the sort of the challenges and availability of sort of assets. I think we have to really come around, and in my view, we have to have underlying assets in Islamic finance. Now, my next point I would like to move is to the Wakala. We have seen that there is, in the interbank market, it's good to note that retail market, they have the products to offer. But we look at the interbank market internationally, we have seen over-reliance on the Murabaha. It's credit intensive when you do Murabaha. B, it is more of a debt type instrument. So you sort of do it from the central bank perspective, it fits very well from the bank's perspective. And it's easier sometime, but so Malaysia may have the commodities to support. But one sort of aspect comes that maybe their Murabahas, but much more than the available commodities. I think this is one sort of area. And we have seen now sort of, at least from Bahrain perspective, I can say, about 2-3 years ago, we developed a standard on unrestricted wakala. There are two types of wakalas, as you would know. One is restricted. Restricted wakala is off balance sheet, generally used by asset management, or it will be mostly dictated by the muwakkil who is investing where to invest. And generally, we have seen been invested in Murabah again, so we should avoid that. And that's why IFM, we produced the unrestricted wakala standard for the interbank market. And it's been, alhamdulillah, quite widely used now. And you should see, and Central Bank of Bahrain also developed a standard or a product for the Islamic banks for the liquidity management need for the unrestricted wakala. The advantage is, and then you see AOFI ruling on the restricted wakala is off balance sheet. But if you see unrestricted and its characteristic, sometime maybe I'll do some workshop on this aspect, you'll see where it will fall. Of course, from IFRS and AOFI standards, it will fall into on balance sheet treatment. And that basis, Central Bank of Bahrain has done a product for the Islamic banks to provide them level playing field. And recently, just a few days ago, some bank told me, then in Bahrain, the central bank is saying that you move towards unrestricted wakala, move away from Murabaha as much as possible. And one of the aspects of unrestricted wakala, when we do, of course, you cannot guarantee the profit, as you know, you can't guarantee the principal. And this product, by the way, came from the UK banks when they were formed. And that time, FSA treat that as a deposit. That's their treatment. And we looked at it sort of, can it be a deposit? Of course, from the Sharia perspective, it cannot be deposit and can never be. But we developed certain sort of, I would say, aspects of it, which makes it sort of role of wakil much more sort of than just you say that I was not negligent, but I lost everything. So that's not the case. And one of the things which is there is the guidance memorandum. And our respected scholars, one thing we wanted to bring maybe later on from the legal perspective is to look at is the role of wakil. In 2009, there was a fiqh majma in Kuwait when they made a ruling on unrestricted wakala that this is not 1,000 years ago, role of wakil was just the agent. Now it's a financial matter. So perhaps the role should be much more than just negligent. And they said that we sort of recommend that uh, the the wakil is responsible for sort of anything which happen to that. So it's not the wakil should provide the evidence that it was sort of not because of negligent. There's some other matter which are there. So legally, wakil is responsible for that. Previously, that was not the case. So this is, I think, the ruling legally. If you look at it, it provides more comfort to the wakil. So these are some of the aspects which were there unrestricted wakala. Then now, my final point I'd like to come is on the hedging, and that one is the challenge which IFM took at the time of financial crisis. And when we took it to our Sharia scholars that we are developing a hedging master agreement with international swaps and derivatives association like IFS, we are sort of sometimes work with other entities for their legal sort of strength point of view. We explained that these are sort of things which we are doing for the purpose of hedging or tahawud, not for purpose of creating a speculative transactions. And took us a number of years to explain, and we finally came out with the master agreement, which provides the institutions who are sort of in the need of to hedge their risk in terms of currency risk, especially to have a master which can cater if these transactions, if there is something happen legally. I hope doesn't happen, but there are event of default is one of the severe events which can happen. Another event, what would be the case? Like we heard earlier, you cannot use the mechanism when the one party defaults, or it cannot really continue with the transaction, let's say foreign exchange transaction for 4 or 5 years, risk. Then what would be the case? How to sort of come out with the value of transaction? You cannot do net present value or discounted cash flows, and sort of come out with one of the key things in the document is how to come out with sort of the area which is to provide you mechanism with netting purposes, the value which is there when it happens. And that mechanism what we developed, I think, is one of the best one available to provide. So it doesn't really look into the cash flow, discounted cash flow or net present value, or you can just exchange